Hello everyone, I am Familia Vernon, currently engaged as an assistant professor in the Department of Commerce at Maulana Azad College, Kolkata. In the last session, we had studied about the overview of the Indian financial system. In this session, we are going to look at and study in details regarding the components of the Indian financial system. Now, as discussed in the previous session, we have got four components of the financial system in India. The first component is financial institutions. Now, what is a financial institution? A financial institution is an intermediary that helps to facilitate the smooth exchange of funds in the economy. Now, financial institutions in India can be classified into banking financial institutions and non-banking financial institutions. The banking financial institutions comprise of private sector banks, foreign banks in India, regional rural banks, and public sector banks. The non-banking financial institutions comprise of non-banking finance companies like the insurance companies, and the development finance institutions like the regional rural banks, Apex Bank, that is NABARD, SIDBI, IDFC, etc. The next component of the financial system is financial markets. What is a financial market? It is a platform which facilitates trade in the financial system among the different economic units in the country. Now, the financial markets can be broadly classified into money market and capital market. Now, let us see what exactly do we mean by money market. A money market is a market for short-term securities, that is, for the securities having a maturity period of less than 365 days or a year. Now, treasury bills, call money market, commercial bills, commercial papers are some of the instruments that are traded in the money market in India. The next type of market is capital market, which is obviously a market for securities which are having a maturity of more than 1 year or 365 days. That is, it is a market for long-term securities. Now, capital market can be further divided into primary market and secondary market. The third component of our Indian financial system is that of financial instruments. Financial instruments act as an asset which will enable its holder to claim for payment at a future date to a particular person or any institution. Now, financial instruments can be broadly classified into primary securities and secondary securities. Now, let us see what exactly do we mean by primary securities and secondary securities. Now, you can see over here, primary securities comprise mainly of equity shares, debentures, preference shares. Now, we will see exactly how these primary securities work with the help of equity shares. Now, this is a small screenshot of my Demat account where you can see the prices of the different companies that have been traded in the stock market, that is NSE, on NSE platform, National Stock Exchange platform. So, if you want to invest directly in the market and derive securities out of it by injecting funds in the financial system, we say that an investor is then investing in primary securities. So, what you have to do is, you can see the limit option here. You simply log into your account, transfer funds from your bank account, and your limit will be generated. Now, based on your limit, you just go ahead in the market and shop whatever units you want of whichever company, and then it will be credited in your Demat account. So this is how an investor can invest in primary securities in the financial system. The next option is secondary securities. Now, secondary securities comprise of time deposits, mutual fund units, insurance policies. Again, I'll be giving a brief idea about how secondary securities work in the financial system with the help of mutual fund units. Now, again, this is a screenshot of my mutual fund account, that is Axis Mutual Fund account, and you can see that my investment over here is 6,000 rupees, against which my current value of my investment is rupees 7,368 rupees as on 4th December 2020. Now, based on my investment, the number of units allocated by the mutual fund houses is 120.738 units, against which it is having a net asset value of rupees 61.02 rupees. Now, what the mutual fund houses do is that they take money from us, the common investors, and with that amount, they directly invest in the stock market, that is either BSE or NSE. So they directly invest in the primary securities and they in turn give us secondary securities in the form of mutual fund units. So this is how one can invest in secondary securities being an investor. Now, the last component of the financial system is financial services. Now let us see what exactly do we mean by financial services. Financial services refer to the facilities provided by the different financial institutions working within the economy so that funds can be mobilized smoothly. Now, the different financial services offered by the financial institutions or the units or the economic units working in the financial system can be discussed as follows. The first type of services they can provide is that of depository services. Second type is that of credit rating services. Third type is leasing. Fourth, portfolio management. And 5, underwriting services. These are the few services that I have chalked out that are provided by the financial service providers in the Indian in the Indian financial system. So this is a brief overview of the financial system, the different components of the financial system in India. So I hope you people have benefited from this video. I hope you all like it, and thank you so much.